Hello, welcome to the daily update. Today we're going to take a look at crude oil. First thing I want to note is the market state, which is bear trend acceleration. So the market has produced a major negative technical signal, which will follow through immediately if valid. So we had a big negative signal. If it's really that bad, it should just go. The attributes of this state are we've got good momentum, negative bias. It's a trend negative situation, and we would expect that volatility would increase. One thing to note about this technical state is it's derived from a negative technical signal. So that signal that the market had, it might be it, and the market may have just been pushed to the extreme, and the signal that generated the negative state may be all we get. So it's important to identify if this market is maintaining structure, and if it's not, we may shift back into more of a digestive phase. Next thing we want to look at is the structure and sentiment, and how does sentiment skew that state, that negative technical signal. And sentiment is currently negative. It's above the market. It's above the upside pivot. Actually, this creates a resistance band with the upside pivot, and this is the area that's keeping the market in an aggressive sell posture. So as long as the market is below this price band, we are negative, and we will look for the market to hold negative structure and work negative structure through the price map. On our strategies, our optimal strategies are in sell mode. We're going to look for a fade into the R level resistance or a reversal back down through the upside pivot, with expecting the market to resume course on the bear trend, taking out the downside pivot and extending for a new leg lower. On the hedge side, if we get a break in that momentum, we'll look for that break at the downside pivot. We may see potentially a reversal, so we're not going to fade into any support, or we may see a breakout above the R level, which would confirm a break in the negative momentum. Before we go more into the analysis, I want to talk more about the practical application of entry strategies, and specifically the EXAD, entry exit adjustment differential, or the alert distance. So if we identify an inflection point, there is a variance around that inflection point and a alert distance. So this is really kind of the sweet spot of this inflection point. And the variance is really the slippage area. So you can call that more of a pivotal zone. So when the market is at that inflection point, it's making a decision. The market state analysis is going to provide you with a backdrop of what you should anticipate, but if we're just looking at these inflection points as is with no backdrop, you'd interpret them as the market is at an inflection point, it's going to be pivotal, and there's a variance around there, it's more slippage, and then there's going to be an alert distance. An alert distance above that would identify areas to accept buy signals, and below that an area to accept sell signals. So when we say accept buy or accept sell signals, we're not necessarily saying blindly accept these signals, but if your tactics are in confluence with that zone. So if you're getting a tactic signal, you're allowed to accept signals in this zone, because now you can define your risk. So we can actually put some bands around there to identify that heat map, that zone around an inflection point, where we know that in the alert distance area we can accept these buy signals, and in the alert distance area below that inflection point we can accept sell signals. And then depending on the market state and the strategy expectations, that will determine which of those signals that we'd want to leverage. Today's example, we're talking about crude oil. Our metrics have identified this variance as 4 ticks for the slippage around the inflection point, and 20 ticks as an alert distance. These metrics are not static. They do adjust, but these are a good guide to use as a general sense when you're looking at if the market is just having some slippage around an inflection point that doesn't really matter, or if it's in a zone that you should consider to accept buy or sell signals. So we come in at 720. I've highlighted the alert distance off the directional at 48.96, that zone, as well as the downside pivot, two major inflection points that are currently in play. Again, this price map is overlaid on top of a backdrop of a bear trend acceleration market state, and we have sentiment above the market. Sentiment bias above the market gives us a negative bias, and the fact that we are below the directional confirms this market is working negative structure. So overnight we see it's held below the directional, which is in line with the market state. Had a little bit of a reaction to half APMD. Market is trending lower below the directional. So here is our area that we really want to accept sell signals in. Market breaks under here. It's going to be not as high a value of a sell. So if we look at size management, the optimal sells are going to be here: largest size, normal size, small size. Identifying what themes in play. Currently the optimal strategy theme is in play. We've got a market that is working lower. Hedge theme won't come into play unless we get an exhaustive turn or a break in structure. So we move through and the market enters our area that we can accept sell signals. So any tactics that we're running, we're free to accept sell signals in this zone, and we get a rejection. Now, as we're approaching this zone, we're anticipating a negative reaction. We're anticipating the market to hold negative structure, and our minimum target is going to be the DP. Since this is an accelerated trend state, we can have even a longer term forecast for the market to deteriorate even further. So as the market comes into this area, we want to be prepared to take an opportunity down to the downside pivot with the potential for the market to release today. Market gives us a small pause reaction off a minor level, which should be anticipated, and then it starts to break down, which is a sign of weakness. Here we have an opportunity to add to a position where we get a retest of this inflection point. You have a failure. You had this minor positive surge into resistance, holding negative structure, and now we're breaking down. Again, just using the price map to stair step an opportunity. And the market breaks into our support area, and you can see how the alert distance supported the level on the downside for a reaction, and now we get a clean breakthrough. So here we're having another negative signal. And one thing about this negative signal, it's not on the playbook. The better opportunities are above the market. It already has made its move, so this is a lower value sell opportunity in this sell zone. The market gave us an opportunity here and paid us, and now we have a new breakdown signal. Again, we're going to focus on this 47.15 1 star as a confirmation of a downside breakout of the critical range, and the market stabilizes and starts to trade around the downside pivot. And at this point, what's our expectation? Our expectation is for this market to accelerate, to build aggressive negative structure. So we should look at the downside pivot as a good barometer now for momentum. And the market really should not get back above this alert distance, above the downside pivot, if it's going to really accelerate. If the market is really bad, and in this market state, a bear trend acceleration, we're anticipating this market to really roll over, more of a pisser technical pattern, where it really starts to accelerate. That's what our expectation is, and that's our story, and we're sticking to it until we're proven otherwise, and we're proven otherwise if we get a break in structure. I've drawn a trend line here. You could also use a simple moving average. The goal is to just identify the aggressiveness of a trend. Bear in mind that this bear trend acceleration signal is still in play below the directional today. That is the longer term picture of this market. It's going to remain vulnerable. It actually remains vulnerable below the R level, but the fact that we've really built structure underneath the directional is significant. But we're talking about more short-term price action, and what do we do here? What do we do at the moment, and when is the right timing? How aggressive is it going to be? Is it going to really take off to the downside? Are we going to get a corrective action back up to 35 for a sell against this structure that they've made and then continue lower? We just don't know. Using a tool, using the price map along with a trend line and maybe a moving average, we can kind of identify, is this market ready to go or not? As we move forward in time, we get the market comes up through the alert distance, breaking the trend line and telling us that we may be in for a pause here in this aggressive selling. It's important to keep a fact focus. Fact is, the market did break below the downside pivot. The fact is, we have been in a aggressive negative sell posture in a bear trend acceleration market state with sentiment negative and following through on a negative strategy theme. And here we would expect the market to get more aggressive and sell off, and it does not. It breaks structure. So this is a tell for the day that something might be up, and if we do start to sell off, it might be not as smooth and aggressive as this, or there is the potential for us to have maybe a digestive trade or even a transition into a hedge strategy theme. So as we move forward in time, we have a market that it does digest, and we are looking for the market to resume and hold negative structure. We have a little bit of a pattern forming here with a base off of these support lows. So we have a kind of a support low here, just below the alert distance, and we have some resistance forming here. At this point, we would expect the market to start to really roll over and build negative momentum. So we could actually draw another trend line with the expectation that this market should maintain negative structure and really start to roll over. And so we've got kind of a good inflection point here that kind of ties in with the downside pivot as a turning point, and our expectation is this bear trend acceleration is going to roll this market over, and we at this point here the market shifts and we get a strong reversal. So what this tells us at the moment is the optimal strategy is over, and we are now in a hedge strategy theme. It's also after 1 o'clock, so we're getting into the afternoon part of the session and things start to get a little unclear, but one thing that we can be pretty confident in is that the market is not going to fall through to the downside today. How far can this correction go? We would expect a move up to the directional, so that'd be 1 APMD, so that would be from the DP up to the directional. We should expect some resistance at the minor level here at 48.35. Market did prove that this was a good structure point, so we should expect a reaction there, and we should be prepared for it. Real sharp surge, and we get a reaction off the minor level. And the market continues to rotate around there a little bit. Again, where are we at in the strategy theme? We are shifted into more of a hedge theme. So we're looking at this market to maintain some positive structure. Anytime we're in a reversal situation, you're anticipating that these shorts are stuck and the market is going to be relentless and it's not going to let them out. And it's just going to really hold structure and just go. And that's the tell of a good reversal strategy, is it just goes. It really doesn't let anybody in. So we would anticipate this market to hold these lows here, break out above 35 and make a play to the directional if the hedge strategy theme is really going to follow through. You know, if we get a break in structure here, it's more likely a tell that we're going sideways for the rest of the day. You know, the big picture then, if we did get that break in structure, would still start to lean back on the bear trend acceleration optimal strategy theme. You do always have to take into consideration the time of day, and late in the day in the crude oil market doesn't have a lot of juice, and the market just churns sideways into the close. So this market started out as a optimal strategy theme, bear trend acceleration, good negative hard action, and broke through support at our DP, downside pivot, and then we broke structure, giving us a tell that we might see some digestive action, which we did. Market attempted to get back on the bear trend and instead broke structure and shifted into more of a hedge position, putting the market back into a digestive trade, setting up for tomorrow's session. For more information regarding JS services and the desktop application, please contact us at info@jsservices.com. Thank you for your time.